Hello, good morning. Sean, are you here?
Yes, good morning, sir.
Hey, hi, how are we today? Hi, Chantal, nice to see you. I think we're just going to wait and see. Okay, God's gift is just joining in as well. Good morning, guys. Just waiting to see if let's see all those who will join in, and then we can kick it off. But maybe Sean, you want to do some background, or let's just wait.
I
Mimshach
think
is
it will
not
be.
yet here with us.
I'm trying to get Mims to join.
Okay, all right. I think when we have enough, then we'll start the meeting.
Yeah,
We'll start.
sure.
I think you should pause the recording while you're at it.
You're now the host, so I think it's someone that have a lot of experience as it relates to startup. He was once the country director for Ventures Platform Foundation, and he's currently the CEO for Telesofters. Telesofters is a tech company that's based in Lithuania but has a presence in Nigeria. He also is the founder of Mimshach King Foundation, where he helps young ones on mentorship, training, and impacting the community. So for everyone that has been here with us for the program from the beginning, I want to say thank you so much. I can see Chantel, God's Gift, Nana Alero. I thank you guys for always being here. If you can hear me, just please say yes in the chat box so I know that we are good to go while I bring confirm if Mimshach can hear us, and then we start. So Mimshach is going to be talking to us. Thanks, Alero.
I can hear you, Sean.
All
but you
right.
didn't give me access to share my screen. Like, I don't have access to that.
Okay, we'll do that right away. Mr. Phillips, can you please help us do that from your end?
Trying to do that, Sean.
All right. So everyone, we're just going to go right into it. As I said, Mimshach was once the executive director for Ventures Platform Foundation, where he led the team in creating impacts in Nigeria. He's currently the CEO of Telesofters Nigeria, a tech-based company situated in Lithuania, but also having a presence in Nigeria. He's also the founder of Mimshach King Foundation, and this foundation is personal to me because it helps on mentoring young ones into having rights role models in the society. Please give Mimshach a warm welcome.
Hi, great to see you here, Mimshach. I ain't seen you in a while. Yeah, I can't hear you. Your mic is muted, Mimshach.
I'm not sure which of my screens is showing now. What are you seeing?
It's still blank. It says it's sharing.
Okay, cool. Let's try this again.
Your screen is not showing yet. Great. Great.
Is it showing now?
Yes, it is. Fundraising 101.
Oh, perfect. Okay, I will just present. Okay, so good morning, everyone. Depending on where you're connecting from, I'm sure probably everyone's connecting from Nigeria. My name is Mimshach, and
no.
Like,
there are people from South Africa.
Oh, great!
South Africa, Kenya, I think Malawi.
Perfect then. Great. So we have a multicultural audience. So good morning, good afternoon, depending on where you're connected from. I will be talking to you about fundraising. I know you've already had a couple of sessions already. So a couple of the things I would say might be sort of a repetition, but I'm going to couch and finally land on impact and raising impact investments for your company, for your startup, or for whatever project that you're working on. But again, before I land there, I'm just going to set some context so that we are able to have a better foundation, and I'm sure that we're all on the same page. Please, throughout while I'm presenting, at any point in time that you don't hear me or you need me to repeat myself, please feel free to stop me. Feel free to say I should go back. Feel free to let me know that you don't have the clarity that you need. And if you have any questions, also don't wait till the end. Just stop me at whatever point you have a question, and I would take it immediately. So I think I have here where I can see your chat. So if you type anything, I would see it. Let me also just pull up the Q&A. So if you put any questions there, I would also see it immediately. You put it there. Okay, great. So with that context and with that background, I can begin. So the first question is, so basically what we're going to be looking at today, I'm going to be looking into the introduction to fundraising. I'm going to talk about different types of funding. Sean already covered this, but I'm going to talk about it from the perspective of what you need to be able to access those types of money. I'm going to talk about their sources. I'm going to talk about structuring your business for funding, which is one of the things that's super critical. A lot of companies say they want to raise money, but not many companies are ready for external finance when it does come, or when the investor is ready to put that money in. I'm going to talk about why investors invest. What are they exactly looking for? If you know this, if you understand how the investor is thinking, you're able to better position to get that money. I'm going to also talk about tips for fundraising and then tips for raising impact investment, particularly. Now, raising finance in general is typically the same mindset, the same methodology, the same structure you need to have in place. So in talking about tips for impact investments, I'm just going to talk about what might be a little bit nuanced for impact investment that might not necessarily be there for other types of investments. So I'm just going to breeze through the first part of this so that I don't have to spend time repeating what you already know, but then really couch and sit down on impact investment particularly. Okay, so basically what's fundraising? A lot of people, especially startups and startup founders, have a disadvantaged mentality about fundraising for many of the ones at least that I have met, because many startups need money. And so when they're going into the fundraising conversation, they go from a point of disadvantage, and they're trying to curry favors. They're trying to sort of beg the investor to give them money, but raising money is a lot different from begging. It's you being able to clearly show that you have a vision, you have a direction, you are creating value, and you are inviting now the investor to be part of that journey and part of that value that you create. And at the end of the day, in raising finance is a win-win, both for the startup that's trying to raise money, or the program or the project, and the investor who's giving the money to you. If you don't understand this and you don't approach the conversation from that point of view, from that perspective, it's very easy for you to go in with a wrong mindset. You can either be taken advantage of or be totally dismissed, depending. One of the key things you have to understand about investment is that most of the people that raise finance are people that don't need to raise finance. And when you really need to raise finance and you go out with that approach of, I really need this, otherwise I'm going to die, I'm going to fail, people typically dismiss you or decide to take advantage of you. So you need to have the right mindset and the right approach when you're going out to raise money. All right, what are the different types of finance? Again, Sean covered this. There's debt finance, there's equity finance, there's grants finance, which comes to talk about some part of impact is in debt finance, some part of impact is in equity finance, but they're definitely not in debt finance. So equity and grants, you have impact investments there, but not debts. And then you have customer financing, which Sean talked about when you talk about crowdfunding, basically. And you have partner financing, which is one of the new concepts that I sort of discovered and is not really covered in traditional types of investments, but I realize it's also one of the really good ways to raise money. And I'll talk about that later on. So let's talk about funding sources. Debt finance is typically gotten from banks or from these new neobanks or new startups that are basically able to give you loans. Debt finance are loans, so which means that you would pay back with some interest. Key things to think about and to take note of when you're trying to raise debt finance. One is there is something we call the moratorium. Moratorium is the duration of time within which you wouldn't be required to service that loan. Servicing the loan means that you are paying back the money that you were given in installments. So they could give you a 1 month moratorium, a 2 month moratorium, which means for the first 2 months after collecting the loan, you're not going to be required to pay back anything. And then after that, you now begin to pay back a monthly fee or a monthly cost with interest. The next thing you have to understand is what interest rate is. Interest rate basically is a percentage of the amount of money that you borrowed that is added to the money that you're going to pay back. Most debt finance would give you a monthly interest. So on the capital. So the capital is the money that you took. So let's imagine you took $1,000. You're going to pay back at maybe 20% per annum interest rate. 20% per annum means that for every year that you are owing, whatever the capital that you have left, you're going to be charged 20% of that, and you pay that. Now, if you're charged monthly, that money is going to be broken down to a month and month charge out. So for every month that you're paying back, you're going to be paying some part of that money from the capital and some part of that money from the interest. How this typically looks for many people is that upfront, you're charged very high amounts in interest and low in capital, and then it goes all the way to the end. But you need to understand these key terms when you're thinking about raising debt finance. Another thing that you need to know is for you to be able to, your business to be able to cover and pay back debt finance. I typically do not advise startups to collect debt finance. You need to be very liquid. What does liquid mean? Liquid means that your business works with a lot of cash, and so cash comes in fairly regularly. 2, you need to have high margins. What is a margin? Your margin is the difference between your cost price and your selling price. Basically, your margin is your profit. How profitable is your product or your service? So if it costs you, for example, $100 to produce whatever it is you're producing or to deliver the service you're creating, if you're selling at $120, $130, you don't have very high margins. You have very high margins if you're selling at 200%, 300% of what you're using to create it. So for example, many of you have heard about the iPhone, right? The iPhone, I heard it costs about $100 to $200 to produce one iPhone. An iPhone is sold for about $1,000. That is a high margin business, right? So if you have high margins and you're very liquid, so you can have high margins and not be very liquid. So what does this mean? It means that you have very high margins. So you produce at $100, you sell at $1,000, but it takes you 6 months to sell. You're not very liquid. You don't take a loan. If you take a loan, the interest rates will kill your business before you're able to pay back. But if you have high margins, you're very liquid, loans are great for you. In fact, I wouldn't advise you to even take any other type of investment, because with loans, you pay back, you own 100% equity, you own full control of your business. By the time you take 1 or 2 loans, you would not need to even use loans anymore to grow your business. So this is for debt finance. Angel investors will give you equity finance. Angel investors, I know Shane also covered this. Angel investors are people, high net worth individuals, particularly people who have run businesses before or have gotten up to upper management within companies and are willing to support an entrepreneur that's starting out. Angel investors will typically take a share of your business in exchange for the money that they're giving you. But beyond the money, they're going to be bringing a lot of expertise, lots of experience, opening you to their markets and opening you to their networks. So angel investors are very good for businesses because they don't just give you money, but they bring a lot more than money to the table. Incubators and accelerators would typically give you, so for example, Kavik is a hub. I think they also sort of run incubation programs. They would either give you grant finance or equity finance, depending on the source of money that they're getting also. So you want to look into incubators and accelerators for support, and they will give you either one of these 2 types of finance. Venture capitalists are institutions. They are organizations that would typically give you equity finance, and they also take a percentage of your business, which is with equity we're talking about. So again, just to explain, equity finance is a type of investment that you get into your business where you're trading a share of your business for some income, for some investment. And so venture capitalists would do this. There are different types of venture capitalists depending on the stage of investment that they're willing to give. They are early stage venture capitalists all the way to later stage venture capitalists. They would typically give you from $100,000 per check to all the way to millions of dollars, depending again on the stage they are. So it'd be very good for you to research into what the different venture VC firms within your locality are, what industry they invest in, and how much they basically can give you in investment. Then we have local and international NGOs. This would typically give you grants or impact investments. Grants are what people would like to call free money. I don't think it's free money, but it's money that you get and you don't have to pay back because it's not a loan. You don't have to give out any share of your business because it's not equity. However, you would have to give back impact. So there's something we call impact returns on investment. So for a local or international NGO to give you a grant, they are hoping that you are able, or they're not hoping, they believe that you are able to create impact in the same area that they are looking to create impact. And they want you to be able to create that impact for the money they are giving you. Impact could be gender equality. So maybe they want to get more women to work in that industry, and they're saying, we're going to give you such and such amount of money to incentivize you to maybe hire more women, or to make sure that more women have the opportunities to work in that industry. So you are going to be reporting back to the organization what those impact numbers are. And you even, in fact, have to promise ahead of time what the impact you would be creating would be, so that they would be able to measure that as you go on with the implementation of the program or of the project that you got funding for. Then we have corporate CSRs. So these are large corporate organizations that have what we call the social responsibility. Corporate social responsibility is what we have as CSR. They would typically want to create impact in a particular sector and industry, depending on what the organization is into. And they would always run these grants programs where they give either local NGOs or companies some funding to create impact in that area. Crowdfunding is how you can raise money from your prospective customers or existing customers by collecting little amounts of money from a lot of people. And then your partner investment, this I'll explain a bit. So when I meet startups that want to raise money, I always tell them that you're not really looking to raise money as much as you're looking to solve a problem in your business, or you're looking to acquire an asset. So if you want to raise some money, maybe you're trying to raise $100,000 and I ask you, what do you want to use that money for? You would have different things on that list. You have, maybe you want to be able to pay for your staff salaries, of course, which means you need to pay for your team. You need to maybe get an office space. Maybe you need to get a logistics vehicle, an official car, something to help movement around. You need to order your product, or you need to produce whatever it is you're producing. Now, if you said you want to hire a team, and maybe you need to hire a tech team to build your product, and I run a tech company, and I say, okay, instead of you hiring a team, why don't I give you the capacity you're looking for? So what do you want to build? You want to build an app? I'll build the app for you. Now, if you're in your budget, you needed to raise maybe $20,000 for the app, and I'm willing to build that app for you. What is that? I've been able to give you what you're looking for in terms of, but without giving you cash, right? So that is what we call partner financing. So a partner that has what you're looking for is able to give that to you, not cash, but give you the thing you're looking to pay money for. That is a way to think about funding also. So you're looking for office space. I'm telling you, I have excess office space in my space. Come use my space. Now I'm freeing up that capital for you. That's also partner financing, basically. Please just be sure. Is everybody following? Let me just get some feedback from you. Are you following? Do you understand? Do I drive on? Do I continue? Perfect. Great. Okay. All right, let's talk about structuring your business for finance. For you to be able to raise external financing, external financiers are not going to give one-man businesses money. They're not going to give you money just because they like you. They're not going to give you money because you're their friend. They're going to give you money because they know that you are structured legally and you are able to be accountable for the money they're giving you. So there are certain things that are required. One, your business needs to be registered legally. So you need to have legal registration to be able to collect money from someone else. So whether you're registered as a not-for-profit organization, you're registered as a limited liability company, you cannot be registered as a sole proprietorship. They would not give you money. You cannot be registered as a limited partnership. They will not give you money. So you need to be registered either as a limited liability company or you're registered, depending on the country, you might be able to register as a social enterprise or you're registered as a not-for-profit organization. This is the only way you'll be able to get money from investors. Now, if you want to raise venture capital or anything that has to do with equity finance, you cannot also be registered as a not-for-profit. You have to be registered as a limited liability company. That's the only way you're able to give out shares or equity in exchange for capital. Two, you need to have a team. You can't be a one-man army. You can't be a one-man team. Because what happens, your company rises and falls on you. So if you're well, your company is well. If you're sick, your company is sick. If you disappear, your company disappears. Nobody wants that. So you need to have a team. And in having a team, not just having you as the head and a lot of minions all around you, no. You also need to have a management team, which means that you're the founder, but you have some co-founders, you have some people at C level, you have some people in management level that can hold you accountable so that you're not alpha and omega. And you say, come here, bring that checkbook here, and they bring it, and you can sign out all the money to yourself. They need to be sure that you can do that. You have a management team, you have an execution team that is able to deliver on the promise that you're making. Three, you need to have financial records. So this is one of the things I tell startups, even when you're not raising money, begin to keep your financial records. Very important. Because when you want to raise money, you need to be able to show what skin you have in the game. Skin in the game means that you've been able to put some of your own money, some of your own time into building out whatever the company has become before you went out to raise external finance. So keeping financial records of inflows and outflows is very important and would be required of you when you're raising money. Four is intellectual property. Intellectual property basically is who owns the rights to the product or the service that you're producing or you're delivering. Who owns it? Now, for many people who are building up new companies, they don't know that there are some things to be very careful of. For example, many companies today have intellectual property agreements that you sign as an employee. Some of those agreements include the fact that if you build anything during company time or using a company asset, it belongs to the company. So it might be your own idea. It might be a new idea you're working on, but you're working on it with the company's laptop. Or you're working on it during your 9-to-5 work hours. If the company can prove that, they can take away that idea from you. Now, companies that want to invest in you or want to give you money, they want to know who owns the intellectual property. Is there anything we should be worried about? This is very important for them. Another reason why this is really important for them is they don't want sometime in the future for someone to be able to come and say that they own rights to the product or the service that you're delivering. So it's very important to know that you own it. So you also need to know that you own it. And if you've done this using company time or company resources, you need to be able to delineate that or get the company to sign that the idea or the product belongs to you. This is very critical and very important. Next, you need to have corporate governance. Corporate governance means that there is a structure that you also report to. So which means you need to have a board. A board, that means you have a board of directors, a board of advisors, whatever that is. But you as the CEO are not alpha and omega, beginning and end. You are responsible to someone else. So if you notice some of the things that happened sometime last year and the year before, particularly in the Nigerian ecosystem, there were a couple of sexual harassment suits that came on some of the Nigerian tech founders. Now, if you notice, what happened immediately was that the board had to step in, and for some of those companies, the CEO had to step down. Now, the only reason why the CEO could be held accountable and asked to step down is because there was the board that the CEO answered to and reported to. So it's also important that as you're looking to raise money, you're already thinking about having a board. If you don't have one, you're already thinking about one. You're already thinking about people who should be on that board, and you'll be able to constitute a board. And then the last thing is having an internal accountability structure. So your board is an external accountability structure. They don't run your business with you. They don't come into your everyday dealings. But internal accountability structure means that within your company, you're not the one that signs everything. You're not sole signatory to the accounts. For example, you're not you can't just raise and approve everything. You have a structure for how things are requested and how things are approved. This way, the investor is confident that that somebody cannot just cart away all the money that has been given, basically. So these are the key things to think about and to put in place when you're thinking about raising external finance. Which each of these things, the investor has more confidence in you, they have more confidence in your ability to manage, and they have more confidence in your ability to deliver on the promise that you're making. Because with every dollar you raise, you're making a promise to the investor. Are we all good? Does everybody understand? Are we on the same page? Can I proceed? Just give me feedback in the chat. Great. Awesome. Thank you. Okay, so let's go into why investors invest. If you understand this, you wouldn't have any problem raising money. All right, now every investor has what we call an investment thesis. The investment thesis is an investor's vision of the world and the future, and where they think value is going to be created, where they think opportunity exists, and how they as a company want to capture that opportunity. For you to reach out to an investor successfully, you need to know what the investor's investment thesis is. Now, many investors have specific industries they want to invest in. They have specific types of founders they want to invest in. They have specific stage of company they want to invest in. They have specific amounts of money that they're going to invest. Now, if you don't understand these things, you could be reaching out to an investor that is not in your sector, doesn't want to invest in you, and you'll be wasting your time. Also, reaching out to them and then seeing that you've not done your homework also shows that you're not a very diligent person, right? So you want to do your homework and know what is the investor's investment thesis, and do I fit into that investment thesis, or can I make some adjustments to my story to be able to fit into their investment thesis? This is very important for you to know. 2, investors invest out of what we call FOMO. FOMO means the fear of missing out. For many investors, investment is a game. It's much more of a game than really it is about the money. For investors, they pride themselves in knowing and finding the next Mark Zuckerberg, the next Bill Gates, the next Elon Musk. And it's always painful for them when they miss an opportunity or they miss a founder that could have been, that ends up being really great. So for them, they want to know that you are going somewhere and you will get there without them. That's why I said investors typically don't give money to people that, they give money to people that are already driving somewhere and will get there whether or not the investment comes in. Now, if the investment comes in, it means that you'll get there faster, but doesn't mean that you will not get there at all. So when you go meet investors, say, I need you. Without you, we're going to die. You are going to die because they're not going to give you money. Nobody wants to give money to the person who's going to die without them, right? It's the same way with like ladies. When you're courting a girl, right? You want to go and meet a girl and you don't want to tell her that I'm going to die without you. And she's going to make sure you die. But you want to go and say, look, I like you, right? If we go together, we make magic happen. But I'm fine. But if we go together, just imagine you're fine without me, I'm fine without you. But together we are a force, right? But without each other, we'll still be successful. But you're going to say, without you, I'm going to die, I'm going to fail, I'm nothing without you. Guy, you're going to die. Trust me. Right, so the same thing with investors, right? And you know, with every improvement that you make, you're much more attractive, right? The same thing with investors. So investors want to know you're making progress. So they want to see your track sheet and say, hey, I used to be here, now I'm here, and next year I'm going to be here. Now, sometimes an investor might not necessarily may not see you attractive at that point. But the more you're making progress, the more attractive you look to the investor, right? It's like you're talking to a girl, right? The last time she saw you, your shoes were not well polished. The next time she sees you, you're wearing shiny shoes. The next time she sees you, you're driving in a car. The next time she sees you, you're being driven by someone else. And guess what? Your attractive level gets higher. The same thing with investors. Now, I'm going to give a story. There's a particular startup that we wanted to invest in my last company. When they reached out to us the first time, we were not interested. But guess what? Over a year, the founder kept sending us updates. You won't believe that in about a year, we were literally begging them to allow us invest in them. In fact, we had to get a friend, one of the friends of the founder of the company, had to reach out to his friend who was already invested in them to convince them to collect money from us. So imagine, have you ever heard of the fact that an investor is begging a startup to collect money from them? But that happens when the startup is really attractive. But that only happens when you're able to show traction. Traction is growth, is improvement, is making progress, and whatever progress means for the company. And this is another story. I wouldn't be explaining what traction is and how to know what your traction metric should be, but that's a topic for another day. All right, now this is a checklist that typical VC firms or impact investment organizations will be taking a look at to know if they want to give you money. So one, are you solving a problem? Are you solving a problem, particularly the problem that the VC firm is interested in or the impact investment organization is interested in? Are you solving a problem? Now, you have to understand this. There are two types of companies. There are companies who are painkillers and there are companies who are multivitamins. Painkillers means that they're solving a problem that people perceive that they know that they have and they are willing to pay money to solve. Vitamins are nice to have, so you're not necessarily, it's a problem. It's not a painful problem. I'm not nagged by the problem. I would like to solve it. I won't necessarily not sleep at night if I don't solve that problem, right? So they're nice to have. So they're called multivites. Typically, people want to put money in painkillers, not multivites. Two is the problem big enough? Now, for many of the people that want to give you serious money, they also want to know that you can make them back serious money. So they want to know how many people have the problem you're trying to solve. Is it a Pan-African problem at best? Is it a global problem? Is it a Pan-African problem at worst? Is it a global problem at best? This is how they're thinking about it. Three, are you the right person to solve the problem? What does it mean to be a right person to solve the problem? Are you connected to the problem? How connected are you to the problem? Which means that do you personally feel the pain? Do you have an internal drive and motivation to solve the problem beyond just I'm an entrepreneur? Did it hurt someone close to you? Did you have a relative die from that problem? Something like that, something strong, a strong driver. Do you have domain experience, or does your team have domain experience? What does domain experience mean? Domain experience means that do you have the technical skill? So it's not just about I'm an entrepreneur, I solve problem. No, if it's an engineering problem, are you an engineer? Is it a medical problem? Are you a doctor, right? Is it a botanical problem? Are you a botanist, right? So do you have the technical skill set required, knowledge required to solve that problem? Or do you have that on your team? Very important to know. So are you the right person to solve the problem? Then do you have the right team? What's the composition of your team? You say, oh, it's a fintech solution and you're all software engineers. Nobody's giving you money. You need to have finance people on your team, people from the banking sector on your team. We need to be sure that beyond the tech, you also are able to deliver the value from the industry standpoint. So we want to know that. Do you have a track record of execution? So what have you done in the past? What is the hardest problem you've solved? Where have you deployed services before? Have you gotten a job? Have you worked in management? Have you managed something? Have you delivered before? And how have you delivered? So do you have a track record of execution? That's one of the key things I want to know. Are you breaking any laws? So this is where regulation comes in. You say, oh, this is a great thing. The regulators are old school. Well, we won't give you money still. Why? Because we don't want to go against the law. If the CBN clamps down on your business, you're dead. So is our money. And we're not about to throw your money away, right? So we want to know, are you breaking any laws? And is there any regulation? If there is no regulation, are they thinking about a regulation for your sector? We want to know because it's very critical. Think about what happened with cryptocurrency and Nigeria, right? The CBN clamped on cryptocurrency. Imagine how many startups lost money, how many startups went under, that was a lot of investment going down the drain just because of one regulation. And then finally, do you have a clean cap table? This is especially if you're raising equity finance, right? Cap table is, so a cap table is your capitalization table. It shows all the people who have invested in your business one way or the other, or rather, all the people who own equity in your business one way or the other. Now, many startups at the early stages of their business are giving out equity left, right, and center. They give their uncle equity because it lets them sleep on their couch. They give their girlfriend equity because the girlfriend is saying, "Do you really love me? You give me equity in your business." When you want to raise money, you have to go clean up your cap table. What does that mean? It means that you have to go and ensure that only the people who have given you serious monetizable value are there, and anybody else who hasn't given you anything that's really serious, you have to find a way to sort them out, maybe behind the scenes, but they have to be out of your cap table, because investors are going to be looking into that cap table to know that it's clean. You have a few people that's possible, and there are people that have given you real value that you can show the monetary value of. So these are the key things to think about when you're going to raise money. At this point, I'm going to pause again and ask, are there any questions? Am I okay? Am I good to go? Do you understand? Is this valuable to you? Great, cool, okay. Do you understand? Awesome, 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 awesome. Great. Okay, so let's go on. Let's talk about tips for fundraising. So when you want to go into fundraising, a couple of things that you should know and you should be ready for. One, you need to develop a business model or business plan. Now, depending on the type of finance you're raising and the stage. If you are a startup trying to raise angel investments, trying to raise angel investments, trying to raise money from an incubator accelerator, you don't need to, or angel investor, excuse me, you don't need to have a business plan, or early stage VC, you don't need to have a business plan. You need to have a business model. Now you can just Google business model canvas, and it's a very easy tool to use. It's also called the one-page business plan. You need to have a business model that works, and you can just show that to them, and you can really raise money really easily. If you're raising debt finance, that's loans, you need to have a airtight business plan. The people in that sector are still very old school, and they want you to have a business plan. Two, you need to do a detailed needs assessment. So needs assessment on your own part. What do you need as a company? What are you raising money for? What are you going to spend the money on? You need to have detailed needs assessments, so you're able to prove that this is why I'm raising $1 million, because I need to do this and this and this, and this is why this and this and this is critical to my business. Three, you need to understand your business and your numbers. Now, understand your business and your sector. It's always embarrassing when a startup comes to pitch, and I know their business better than they do, or I know their industry better than they do, I know their sector better than they do. It's terrible. It's always terrible. Do your homework, do your research. Who's your competition? Who's playing in the market? You need to know all of these things. Who was a major player in your ecosystem that lost money, or that died or went under? Why did they die? Why did they go under? These kind of things. Who are the investors in your ecosystem? Who are the people that are investing in startups in your area? You need to know all of these. These are very critical things to know. And then your numbers. You need to have your numbers at the back of your hand. Some key numbers to know. One, what is your burn rate? What is burn rate? Burn rate means how much money are you burning month on month? So if you're saying that my burn rate is $1,000 a month. So I know that every month for the company to be alive, you need to spend $1,000 to be alive every month. What are your unit economics? Unit economics means that how much money are you? What do you need to spend, or what do you need? What value do you need to create, or what money you need to spend to produce one of whatever value you're creating? So I'll give an example. How much money do you spend to produce one product, or to deliver one service? How much do you spend to acquire one customer? So these are your unit economics, right? What do you need for any one thing to happen? One customer to appear, one product to be delivered, one product to be created, or what are that? So you need to know your unit economics. You also need to know what is your what's the word for this? It's not the lifeline, but it's your how much time there's a particular industry word that's escaping my mind, but basically how much time runway. What's your runway? Your runway means how much time do you have to death in cash. So when you know what your burn rate is, so let's say your burn rate is $1,000 and you have $10,000 in the bank, what this tells you is that you have 10 months of runway, which means after 10 months, your company is going to go under if you don't get any new money coming in, right? So you need to know your burn rate, your unit economics, your runway. These are key numbers to know. And then how much are you producing for? How much are you selling for? What are your margins? And all of that. These are key things to know as you're running your business. Now, these are things that you don't have to check the books to know. You need to be able to tell an investor, because you might meet an investor in an elevator, right? And you want to do an elevator pitch. So it's very important for you to know these things. Then you want to know research appropriate investment types for your business. So you want to know which kind of investments work for your business. And so that when you're approaching those investors, you're approaching the right kinds of people. And then you want to create and practice your pitch. For the entrepreneur, pitching is your life. I was talking to one entrepreneur one day, and he was telling me about his business, and it was very boring. I'm like, now I'm uninterested. I was like, but I wasn't pitching. I'm like, you're entrepreneur. You're always pitching. Every time you open your mouth as an entrepreneur, you are pitching. So you need to have a pitch, practice the pitch over and over again. It's also very valuable for you to have a one-sentence, one-line pitch. Hello, my name is Mimshach. I run XYZ company, and we connect this to this. Very simple one-line pitch. It lets you shop around, especially when you're at a networking event where there are lots of investors or potential investors. You want to go around the room really quickly and find people who are interested in what you're doing. So you have to have a one-line intro pitch that says, hey, this is who I am. This is what I do. Are you interested, right? And very important to have that. Great. Now, some tips. Yeah, maybe you can redo your pitch deck. God's gift, I should have listened to this before doing my pitch deck. Would a replay be available? I guess the organizers can say if a replay will be available for this. I'm sure it should be. All right, tips for fundraising. This is now for impact, particularly some nuanced things that you need to add when you're going to raise impact investment. One, you need to develop your impact pitch. Your impact pitch is quite different from your business pitch. Your impact pitch shows the difference you're making in the world, why that difference is important. So for example, you're tackling poverty, you're tackling gender inequality, you're tackling nutrition. So whatever that is, you want to be able to show how your business is able to do that. So you need to have an impact pitch, it's important. So again, how are you making the world a better place? You want to be able to say that. Now, funny thing about it is that your impact pitch might not be very obvious. So for example, let's say I'm a regular startup. I'll give an example. There's a really good example in Nigeria. There's a company called Studio 24. They are a photo studio. Now, on the surface, if the founder met you and said, hey, my name is Uchenna, I run Studio 24, and we are a photography outfit that help people capture moments and keep them and make sure they're memorable. Now, you wouldn't know what their impact is, but his impact is he hires only women. Only women. The whole company is run by women. Now, he can't tell you that from his business pitch, but he can tell you that from his impact pitch. So his impact pitch is that he empowers women to be able to work in an industry that is heavily male-dominated by hiring only women in his company. Now, if he says that, anybody who's gender equality inclined is that ears are tingled, their antennas are open, they want to work with him. So it's very important to know what your impact pitch is. Next is, you want to have and be able to communicate your impact goals. Now, impact people are very goal-oriented, the same way with business people. So with a businessman, he wants to know what's your revenue target? What are your projections? How many customers are you going to have by the end of the year? The same thing, they want to know your impact. What's the impact you want to have? How many women do you want to have empowered? How many kids do you want to have taken out of school or back to school? How many? So they want to know. Impact numbers are very critical for your presentation, and also having this at the back of your hand when you are presenting or you're talking to a potential impact investor. All right, you need to also align with the sustainable development goals. So there are these goals They're called the SDGs. They've been written already by the United Nations. They show where the United Nations is looking to invest, or anybody else in the impact space should be investing over the next 15 years. It started in 2015 and it's going to run, to 2030. So there are a couple of more years on that. There are 17 goals. So whatever impact you want to create has to be aligned with the Sustainable Development Goals for you to raise any form of impact investment. So you want to go and read them, know them, and figure out which of the goals. And so many times your company might be attacking more than one of those goals. So you want to know which of those goals are there, how are we solving for them, and be able to tell that story. Then next, you need to staff grants writing capability into your team. If you're going to raise impact money, you're going to be writing a ton of grants. And grants, see, trust me, grants writing is a specific type of writing. It's not a normal type of writing. So you want to have a person that can write grants for you. And then next, you want to network within the ING or impact space. To be honest, most of the impact investment that's raised, most of the impact investment that's raised is typically raised from people that know people. The grant opportunities, even though they might be open to everyone to apply, many times you will not know if you're not told. So you want to have friends there who know what you're doing, who know what you're working on, who knows the impact you're making, so that when those opportunities are open, you are directed to those opportunities. Again, networking for an entrepreneur is very critical. I'm a super shy person. I'm an introvert. I don't like to go out. I like to stay in my house. But because of these things, I have to go out. I have to smile. I have to go for drinks and coffees and galas and all this stuff just to meet people, because meeting people is good for your business, is good for your brand. And so when opportunities come out, they're thinking about you. There's something I tell people about the concept of top of mind. Now, I might know you, I might know what you do because you told me one time. Now, an opportunity shows up on my door, but I'm not thinking about you at that time. The theory is very simple. People are thinking about themselves all the time. They're not thinking about you, right? Now, for them to think about you, you need to remind them about you as often as possible. So you're reaching out to people once in a while. That's why you remember their birthdays, you remember their anniversaries. That's why you go for their events. Why? Because it might not necessarily be an opportunity that you know that's available then, but when you are there in the presence of, people get to remember what you do. Oh, that's true, you do that thing. Oh, there's this guy I met recently, I think you should be meeting. But if you were not in the room, you were not there that day, guess what? You won't get that opportunity. So you need to be there. You need to remind people that you exist, remind people of what you do, network, make friends, and maintain those relationships. Very, very critical. Okay. With that, I think we have come to the end of my presentation. So if you have any questions, please let me know. Ask me and I would answer as much as I can. And if I don't know, I would tell you I do not know. All right, over to you guys now. I'll be waiting to get questions, comments, suggestions, whatever it is. And also feedback. How can I do this better? Was I good? Could I be better? Was I talking too fast? I tend to talk too fast. Let me know.
Another typical Mimshach day, blowing us out of our socks. So we know. I can see from the comments here that it's been good. Yeah, guys. So you have Mimshach at your disposal. Please let's hear what you have. Ask your questions. It's very difficult getting Mimshach. So when he's here, I really like you guys to take as much as you can out of him. Yeah. If you have questions, quite some things in the chat box.
Wait, questions would be good. Okay, Sean said something.
Mimshach, go ahead, please.
Now, so I said questions would be good, and any question, it doesn't have to be about fundraising or impact. It could be about anything in your company. I could give feedback. At least I'm here for another 10 minutes. So anything at all, I would be very happy to give feedback or give my input on. Sean, yeah, you said you dropped a link.
Yes, there's a link for a survey, feedback survey. Please, everyone should try and fill it and share with us, please.
I would also say, if you want to ask a question directly, you can put up your hand and we can also respond to that as well. If you'd like to ask Mimshach a verbal question, just raise up your hand and then we'll give you access to do that. Anyone? While that is happening, Mimshach, I have a question for you.
I think there are about 4 people whose hands are up, but you can ask me. Yes,
oh,
please.
Great. Okay, go. Let's deal with the guys whose hands are up first.
Okay. Olaide, I'm going to let you talk. So over to you.
Yeah, thank you, Mr. for the session. Can you hear me?
Yeah, very well. Please proceed.
So I just think a kind of slight clarity. If we are working around distribution and okay, you have a bit of e-commerce and you work with an agri space, but now you want to expand to supply chain, in helping other bringing other actors on board. Now, understanding the sector and how you can navigate the operation. Now, if you are speaking to people that, okay, this is the product we want to launch, to what length will people believe in you developing that product, as in speaking to investor on a product you want to launch that have not been, that you want to launch, and asking people for investment.
Yeah. So thanks for that. So basically, what you want to be able to show is track record. One of the key things I talked about in my presentation is your track record of execution, right? Where is that? Yeah. Do you have a track record of execution? So if you want to tell me about something new you want to do, you want to tell me that, oh, look, even though this one I'm going to do is very new, I'm not new to this thing. I've done A, B, C, D before. I've excelled at it. I've made so much money in that, so you're showing, sorry, excuse me. You're showing that you have a track record. This is very critical. So you need to put that in there to show that you've done something before, you've excelled at it, you've succeeded at it, and so you're bringing all that expertise to bear for the new thing you want to do. Make sense? That will give them some confidence. Okay. Olaide, hope I answered your question.
Yeah, thank you.
You're welcome. All right. Samuel, I'm letting you speak now.
Thank you so much, Mimshach. That was really good. Really enjoyed it. I have my question is stemming from the last speaker that just spoke. The track record. For instance, I run a company focused on collecting data to reinvent GDP. And really focusing on that because of investment that we're talking right now in Africa, where many of the investment comes from the knowledge of the investors being very Western and not local. And so we want to collect data locally. And so when you try to pitch this, you're sort of pitching like you're sort of an investment company, sort of. But we're saying, oh, we don't want to be an investment company first. We want to collect data of the problem that's happening and the people that are solving the problem so that we can actually give this data to VCs and PE. So I wanted to just ask the question, when you're trying to showcase traction of this, it sort of sounds like thought leadership, and it's very limited in countries like Africa. What would you recommend is the best way to go about showcase, again, someone like me now, track record, spoke on TV, hosted societies in the UK to showcase the ability that their degrees are not connecting back to Africa. Just many of these tractions, right? But it's so, when you're sitting with an investor and you're trying to just accumulate all the traction you have done for the past 11 years, they're just like, we don't still see how this thing is going to make money. And my question is, how do you showcase traction? But a company like this now that does not have a model for raising should I say revenue? It doesn't have that totally until we test out the market. How do you pitch out such a business to the investors? And do you think something that is not even an investor that needs to hear and one needs to build that traction by themselves? I don't even know if I'm asking my question the right way. I think, Mimshach, I'm serious, to be honest.
I understand you, but you're not asking the right way. You're not asking the right way, but I understand the problem. I understand your problem. So your problem is not how do you show traction. No, because from everything you've said, from what you've said, you seem to have things on lock in terms of, are you able, people are not second guessing your ability to execute. Showing traction is trying to show, or showing a track record of execution is trying to tell the investor to know that it's not about the money. Beyond the money, give me the money. Your money is safe because I know how to do execution and I would execute excellently. Where you're having a challenge is with revenue. People are asking you, okay, you can do this stuff and we know it needs to be done, but who's going to pay when it's done? That's the question they're asking you, right? Just to be sure.
Absolutely, yeah. So
exactly.
Yes, but you tell them the target audience, you tell them the target market, and they're like, "That sounds like you're trying to take everybody on board."
Yeah. So again, so this is a way. So you need to go back to your business model and understand. Now, for me, I think there are low-hanging fruits. I think that there are people who are trying to, one of their missions is to unlock capital in Africa. And most of them are not VCs. They are typically INGOs, they are typically impact investors and impact organizations, that their mission is that they want to be able to help more capital to come into Africa. You want to be able, those people should be willing to fund these types of initiatives and this type of researches. Chambers of commerces will also be quite interested in these kind of things, because for them, they already have a collection or a collective of businesses that are trying to do business in Africa, and they need data. They know that they need insight to be able to make the right decision. So if you're saying, hey, you guys already have an association, you guys already pool money together, fund me to give you insight into those data, and you'll be able to make better decisions. And again, guess what? The exclusivity of your data now makes it even so much more. So imagine that you're working with, say, the UK Nigeria Tech Hub, which is a really great organization to look into, or the British Council, for example, and you're telling them that, hey, I'm a professional researcher. I've been working on some interesting research on understanding the African landscape, and I'm very happy to create these reports and these researches that are only open to the UK and the UK Tech Hub, that allows you to make cases to the UK investors to attract more investment into Africa. Now, you are helping them achieve their mission by giving them the data they need to make informed decisions, but also giving them the data they need to convince people to make informed decisions. Now, if you're doing this with specific people who have those missions, it's easier for them to give you money because they already have a budget for researches and reports like this. So think about it that way. Sam, I don't know if that was helpful. Oh, great.
Oh, that was powerful. I would definitely be in your DM very soon.
Awesome. Great, Samuel. Okay, so I'm out of time, but I'm just going to take Timothy, and then I'll call it a day. So Timothy, I'm letting you speak now. Please feel free to ask me a question.
Okay. Hello. Good morning, everybody.
Hi.
Honestly, I think I can say this section is a mind-blowing section. I've learned more than what I bargained for. My question is centered around raising funds for a fashion brand. Okay. I own a fashion brand, and our business has how do I call it now? Has a tempo movement of income. Now, how do I raise funds? Not talking to the bank, because the financials is not stable. The chart for the financials is zigzag. How do one pitch to be able to raise funds? Because we're trying to move from made to order to ready to wear, because ready to wear is the market now.
Okay.
Yeah, that's my question.
Okay. Again, I don't know so much about fashion and the fashion industry, so I might not be able to tell you specifically where to get money, particular money from. But it just follows the same principle, right? The first thing is understanding who today invest in fashion? I know that there will definitely be people that invest in fashion already, that are willing to give fashion brands money. And what are they looking to invest in? Now, you have a thesis that ready to wear is the next big thing. I don't know what it is. I don't know, to be honest. But you need to know, what do they think the next big thing is, and how are they putting money in that? So that's very critical for you to know. So who are the people investing in fashion? What are they investing in? And how do you align with what they're investing in? Then you need to reach out to them. Now, do you already have track record? Do you already have a fashion brand? Are you already doing what you ask, trying to raise money for? If you're already doing that, that's great. Then you want to know, what is the potential for this? Like, how big can this become? How big can this be? How big are you thinking about this? And once you're able to put that together in a pitch deck to say, hey, this is the problem we're trying to solve. This is how we're solving it. This is how big it is. This is how big it's going to be. This is who I am and my team, and why we are the best people to solve this problem. You are able to then go to the people who already believe in fashion, already putting money in fashion. So it's easier to convince them. Now, it's so much more difficult if you're going to speak to someone who has no idea, like me now. I have no clue about fashion, no concept for fashion, and then you're trying to convince me to even begin to think of fashion first before I begin to think about you, right? So you want to already go to where the money is that's earmarked for fashion, and you go there. Now, for impact, it's also a different ballgame entirely. Now, for impact, you want to be able to align. It doesn't matter whether it's fashion or whatever. You want to now align with one of the sustainable development goals. So imagine you're saying, hey, through ready-to-wear fashion brands, we can empower 1 million women in Africa to be able to be self-sustaining, get out of poverty, and fend for their families. And we're going to do this by creating a ready-to-wear brand that is able to provide jobs to 1 million women across 1,000 communities, where we're going to create hubs, manufacturing hubs, that would be able to help these women to manufacture their own clothing with patterns and templates that we have created, and we're going to give them a marketplace to sell. Now, this conversation has nothing to do with fashion. I don't really care about fashion. I care enough to know that the jobs, that the market does exist for the clothes they're going to create. If the market does exist and you're talking to an impact investor who cares about poverty alleviation for women, then you're game. So you see, now with impact investment, the conversation changes from the industry and all of that to, is it going to create impact? What is the impact story behind it? How are we going to ensure that we find the right women, we train the right women, we give them the right equipment, and we can ensure that they produce the quality that the market wants and you can deliver. So you need to know, where am I raising money from? Venture capital, angel investors, or impact investors? What do they care about? How do I paint it in the way that they care about it? And how do I sell it to them there? Right, so those are the things you need to think about in terms of how to do that. Now, one last person, I'm just going to read your question and answer it. God's gift, I won't unmute you. I'm just going to read it. Thank you, Mimshach, for your time. You're welcome. For us, a startup, how do we sell our idea? We know we'll scale to a big organization. For instance, an insurance company, given the fact that we are still scaling on the level not compared to theirs, is very risky pitching to big companies because they can steal your startup and execute it, maybe even better than you. So a couple of things you want to be able to do. One is you want to have an insider that has access to senior management level, which means that you want to be speaking to the decision makers. The chances of them stealing your idea are slimmer because they don't want the reputational hazard. If you talk to a manager, he can take your idea, pitch it to the management in the next management meeting as his idea, get funding for it and do it. Two is you want to talk to senior management at senior management level. Two is you want to be able to show them why they need you. So it's not about the product. It's not about the idea. It's not about the scaling. It has to be something that you have that they cannot have. They are not able to have. So maybe it's your technology. You created a technology that they will not be able to create over time. Maybe you have access to a particular market segment that they don't have access to, and it will be difficult for them to get access to, right? So you want to have something that they don't have that they need, something that is particularly important and critical for that product to succeed. If you don't have this, don't talk to a corporate, they'll kill you, right? So one, you want to talk to upper management. Two, you want to have something that is required, something that is needed, something that they need to have. And then for me, the last thing is, why talk to corporates in the first place? Why don't you just go raise money and do this thing yourself? I don't think you really need a corporate that much. I think right now we're at a terrain where Corporates need startups more than startups need corporate. The only problem is corporates don't know they need startups, so they are being douchebags about it. So if you already have something that will scale in a sector that is fintech insurance, go raise venture capital, please. Just leave this to corporates alone. Go raise venture capital. If you grow big enough, they'll come to you. Trust me. And if you have something that will really scale, you will grow big, you will grow fast, and they'll come for you. They will come to you and they'll be begging you to partner at that time. All right, thanks, guys.
Mimshach,
yeah,
you've been amazing. I think we should let you go. I'm sure you're about to jump into another meeting as it were.
Yes, please.
Please, would you mind dropping just a detail in the chat, maybe your LinkedIn address or something where you can be reached or followed on social media for those who might want to reach out to you again?
Of course. So it's at Mimshach King on all social media platforms, but I'll also give you my LinkedIn here.
So while Mimshach is doing that, please, if you've not filled the survey online, kindly do so now before we close the meeting. We'd like to have feedback from you guys about how the sessions have been. Have you learned anything new? Has the presentation been great and all that? So please, if you have not, do us a favor, fill the survey that we dropped earlier. And also please go to the Kavik YouTube channel. You'll find all the videos there. Thanks to AfriLabs for putting this together for us as well, facilitating this and making it happen. So if you go to YouTube, you will find us there and you watch these videos over and over again. I guess even for me, I need to watch Mimshach's session over and over again because there's a lot to glean from it as well. Yeah, Mimshach, any last words, your goodbyes? And
yeah, awesome. So thanks, guys. Thank you, Mr. Philip, for putting this together. Thanks, Sean, for inviting me over. It's always a great opportunity to share. I know I get very busy, so it's very difficult to communicate, but I'm happy I could do this. So thanks, everyone. Again, reach out to me on socials, and I'll be able to engage further and see. And let's make magic happen. All right. All right. Thanks, guys. Take care.
Thank you so much, Mimshach. That was a powerful session. Really appreciate. Thank you for taking time out of your busy schedule to make this happen. Super, super grateful. Thank you, everyone.
My pleasure.
Mr. Phillips, thanks for the past 9 sessions. That's been awesome. For everyone that has been with us from the beginning, we really appreciate you. Thank you so much. For those people that missed some part of it, please go to Kavik's YouTube channel. We have all the sessions uploaded, and we would have this uploaded within the next few hours. Also, please remember to work on the survey. Immediately after this meeting, the survey will also come up. So please do fill the survey and let us get your feedback so that we can improve on the next one. Please keep in touch. We'll also keep in touch with you. If there are any programs, mentoring sessions that we are able to bring up, we will share with you guys. So please attend to your mail as we correspond with you. Thank you very much. And it's been an amazing time with you all.
Samuel says he wants to pitch and collect AfriLabs money. Samuel, you need to get that pitch together very well. Alera, thank you for sending in your pitch. We'll get back to you. See you guys soon again. Have a great day. It was nice having you. Thank you.